welcome to the November 2022 monthly market update. My name is Ryan Flanders, and I'm the Flanders Group's Chief Investment Officer. All in all, October was a solid month for financial markets as they bounced back after a difficult September. Interest rates continued to trend upwards, though expectations of the Fed moderating its policy continued to increase as the month progressed. These expectations, coupled with better than expected economic and earnings news, provided some cushion over fears for the future. The Dow and the S&P showed strong gains, while the Nasdaq slightly lagged but also remained in positive territory for the month. Abroad, developed markets also did well, while emerging markets continued to pull back due to a stronger dollar. Fixed income was mixed, with the aggregate index down slightly with higher rates, but high yield showed gains for the month. Now, before we dive in any further, I invite you to take a moment to click the red subscribe button in the lower right-hand corner of your screen so you can stay current on all of our content as we continue to expand on our video updates. Okay, back to this month's update though. The primary driver behind October's rebound was climbing optimism that the Fed will slow its future rate increases. Last week's meeting still resulted in the expected 75 basis point increase, though a slower pace looks more likely into the future. The current driver of this optimism has been slowing economic data, with consumer and business confidence both pulling back a bit. There are clear signs that the Fed's rate increases are starting to work, and that should affect both inflation and future policy. Remember, economic slowing is still growing though, and job growth remains strong and is propping up increases in both personal income and spending. While pulling back slightly, business confidence also remains healthy, and corporate earnings have been, for the most part, beating expectations thus far. While the Fed's policies are working, so far at least, they haven't derailed growth. This combo was good for markets as the lower fears on rates and better than expected earnings provided extra oomph for the markets into October. That said, though, there are also risks in play as we enter the end of the year. There's still the possibility that the Fed surprises with either its comments or future rate increases, derailing the positive expectations that took markets up most of last month. And of course, risks outside the U.S., including Ukraine and China, remain very real. We're certainly not out of the storm yet. But despite the headlines, last month's rebound suggests many of the risks may be priced into the market already, even as the fundamentals of job growth, spending, and corporate earnings continue to beat expectations. With sound fundamentals, the downside risks appear to be contained. And that's the bottom line here. The downside risks are real, but there are also upside opportunities over time. And the big picture is that this too will pass. That's it for this update. Thanks for watching. Join me in December for the next one. If you have any additional thoughts or questions, please feel free to reach out. Thank you.